Hey guys, today is March the 4th of 2024, and it's that time of the month. Take a look at uranium spot and futures. So without any further delay, let's get into it. So I like to trickle down my videos with starting with uranium futures and then work my way to uranium spot. Look at the geometry, look at the indicators, and just see what's cooking there. So far, a couple of things. This white line, which I call a trend line, is not telling you that we're going to go down to 48 bucks. Let me just put that out there because there's some folks on Cyber World that think that I'm forecasting a major crash. So if you want to think that it's a crash or whatever, I'm telling you, this is just a trend line 101. If prices break above trend lines, sometimes it's 50-50 where it could retrace and go up, but sometimes it breaks and continues going and breaking down. So is it always reliable? No, but it's 50-50 like everything else. Is not really that reliable anyway. So just putting it out there because some folks thinks, that I'm forecasting gloom and doom. So now let's get into the good stuff. So uranium futures has been struggling here at this 106-ish and change level for the last 1, 2, 3, 4, 5 weeks. 4 or 5 weeks up here having a tough time. I'm going to show you in the video why we are stalling here. Geometrically wise, why we're having a tough time. Bear camp supply zone is 140, 110. We have not penetrated that yet, but we stalled very early. And now it's pushing lower. Where's support? Support is 93.30 and 78.90. We take our Hekanashi out and put regular candle. We just got a sell signal for February the 20th of 2024. Weekly sell signal. I'm sure the monthly is still positive, but the weekly has just kicked in. And like I said, let's see if this holds. And if that doesn't hold, that'll be your next level. 77 all the way to 78. Smack your midpoint right there. Let's look at the daily and see what's cooking on the daily on uranium futures. And you can see, if I put my Hekanashi back, you can kind of see what's going on. It went all the way to 106 and change, pulled back. You can kind of see it. Now we're going to retest to push higher and penetrate the bear camp. And what happened was a failed new high right here. And now it's pushing lower. And these are your targets or possible support. And trend line, like I say, is not saying that, in this one case, some people might think, oh, you're forecasting 84 bucks. No, it's just a trend line. Trend line, look it up. And you see that it's just hugging that. It fails. May probably do this here again. And then if it fails, it might do it over here. And then if it fails, then that trend line is indicating you that, yeah, that line is valid until maybe when we get here. And maybe things might change. But as long as this trend line is holding, it's kind of giving you a magic line in the sand. Beach. All right, let's go to the uranium spot and see what's cooking there. Okay, so this is my master chart on uranium spot price, and you can see that we got a close of 125, and now for February we got a close of $95. But in reality, keeping things in perspective, we hit a high of 106 and change, maybe 106 and 40. So I just want to make sure that you know how high we went. Because if you look at this, it looks like we just went to like $100, but we really went to 106. Because I'm going to show you why we stall. Maybe not on this clip, but I'm going to show you on the next one. So a couple of things here to digest is the RSI hit a peak somewhere around 1996, around there. Yeah, somewhere around 1996, it hit a peak and then pulled back. And you can see if you look at the RSI right here, we're hitting that peak, matching that 1996 high and now pulled back. This peak high, we were just on full throttle and then was just pressing hard on the gas. But interesting that it peaked right where the 96 high on the RSI. Next thing, let's close this out. The spectrum cycle analyzer that I use. Let's go over here. Oops, not working for me here. There we go. Here is using three spectrum, you can say Bartell highs or strong spectrum cycles here. I picked three, and I've had this for a while. And this green one topped out, around November of 2023. This blue one is topped out around 12/24/2023, and this red one now topped out on January 24 of 2024. So these three were here, and I created a composite of all those three, and pretty much it kind of picked that peak. I don't know, maybe I'm early right now, but so far this is looking good. This rarely happens. I just want to tell you, this rarely happens. It doesn't get better than this, but when it does happen, it's not bad. It's pretty tight. But sometimes it peaks earlier, sometimes it even peaks later. But so far, this composite of these three cycles so far has been working out. And then it pulls back somewhere to like maybe next year, hits a trough and then goes up. So this all right here remains to be seen. But if we start making lower highs and lower lows into the year 2020, pretty much the whole year of 2024, might probably find a bottom maybe around August, maybe around December. Too hard to tell, but we just got to see what price action is going to do for the remainder of the year. Next thing I want to show you, and this is pretty much the indicator clip that I'm using. Well, with the Bradley model, so far you can see what the Bradley model has worked out. Pick this peak here, and there's a turning point here, but we went sideways, and it looks like directional wise, the Bradley model worked out here. The Bradley model peaks around March the 13th, and then goes lower to March the 8th of 2025. So let's see how that plays out. And then lastly, the Fourier analysis. There was a crossover here on December the 12th of 2023, but we kept going higher into January and February. So there's no crossovers here. The next one with a different algo. There's really no crossover here other than this just bottoms out right here, and we're kind of like hitting a peak here. So is it an inverse? I don't know, but there's no crossovers until May of this year. You have one right there, so that remains to be seen into the future. So let's go to our next clip in regards to geometry, so I can show you why uranium spot price is stalling at 106 and change. Okay, so this is the master chart. This is the one with geometry that I use. And I'm going to put the Gann fans first. So far, before I even do that, I just want to show you how high this thing went. This line right here is where it hovered, uranium spot, around 106, 106.40, 106.22. You can see that I have my timing indicators here. And as of the close of February, we pulled all the way back to $95. So this is where I want you to focus on. When I put my Gann fans, you can see that we pierced the 1x2, but now we are below the 1x2. And this is the 1x1. This is a stronger angle. And it showed that it was strong, but now it has pulled back. And now it's below the 1x2. But the important one here is from the all-time low of 2001. And this one is the 45 degree. This is a strong angle. This was, is the line in the sand between really strong and a little weak. And we're still on the weaker side because we kissed it and pulled back. They say that when you according to Gann theory, you will find support and bounce from angle to angle. But this angle's all the way down here. I'm not going to say it's going to go all the way down there. There's going to be a couple of support areas before it gets down there. But can it get down there? Very possible. I won't say it won't. The ellipse technique, from a scale chart, you can see that we're kind of finding support at the circumference level right here. So let's see if this holds or it pulls back into the ellipse. another square from the low to the high using the Gann square. You can see that it failed the 104.25, broke through this angle right here, and now there is support around 93.12 cents in that area. And if that fails, you got this angle here. And if this doesn't hold, then obviously you got this angle, and then the big support will be the $71. Anywhere between 71 and 77, I think there will be some good support here. If it ever gets down there, I might dip my toes in there again, but that's just speculation if it gets down there or not. So far, from this square low to this square high, squaring the range, you can see that it already took out 96.83. The next level will be 92.12, and if that doesn't hold, you got this angle, and there's a timing point coming here, which would be October the 24th. That remains to be seen, but so far, between 92 and 93, there is some kind of support that we just have to see once it gets there. Andrew's pitchfork, we failed at 75%. You can see that obviously is the 50% right there. Fibonacci, yeah, there's the 86.90, which is the 38.2% from the all-time low, all-time high. We haven't gotten there yet. From the low 2016 to the high of 2007, you have area of 61.8, which is 91.25. Advanced support resistance, it took out 96.98. There's one coming here, timing vector point, which for May of this month, this year, that has an somewhere in the future, so I'm not too worried about it until we get closer to May. We'll look at it again. And then advanced support resistance from this low to this high will be $71. That'll be open space right here. So I don't know. I don't even know how long this video is, but I might probably leave it here, and then maybe tomorrow I'll do the stocks, because I like the stocks. The stocks are fun. They're like a little more, it's more information, and you can kind of see things, and they're all different. Here we just have uranium futures and uranium spot price. But to sum it up, where are we at? Well, you're approaching support, and if 95 doesn't hold, 93, 92, 91, it could go lower. So let's see how it's going to play out. But so far, this is my update for uranium spot price, and let's see what the close in March brings us. If we're going to just kind of go sideways here, or sideways grinding lower, and maybe there's a possible turning point in the future. I'm going to sign out. Hopefully you like this video, and I'll keep you posted on my thoughts on the uranium spot price.